the #2 ranked analyst on Cisco's stock. We have Bill Kreher, an analyst at Edward Jones, joining us from St. Louis, Missouri. In fact, Bill still has a buy rating for Cisco's shares. Bill, good to have you with us. Hope you're doing well there on your Wednesday evening. What about Cisco's results? I mean, it seemed to beat the streets, but still we have Cisco shares falling in after hours.
Well, yeah, first of all, for having me. And I was very pleased with Cisco's results. The shares may be a little weak due to John Chambers' conservatism in providing guidance. And while the actual numbers didn't look so bad in terms of the outlook, John was very careful to say, let's not get ahead of ourselves. And the recovery, although it was very balanced this quarter, may be a little lumpy in coming quarters.
Lumpy in what sense, and why the lumpiness? Is it because sales might be in question, corporate spending might be dented a bit?
Well, I think he just wants to, again, be conservative. The fourth quarter is going to be facing tougher comps as we started to see the turnaround last fourth quarter. And, you know, Europe, there continues to be concerns around in demand there. And while he was constructive in his thoughts on Europe, he did say that it may lag some of the other regions. But again, he did still give what I thought was solid guidance.
Yeah, solid guidance. Let me ask you about Cisco and its cash position right now, because as you mentioned, they have a lot of cash on hand. I mean, $40 billion worth. What are you going to go out and do something with this cash and actually add value for shareholders?
Well, if you've looked at Cisco's track record over time, call it the last 10 years, companies made 89 acquisitions. And so if you look at that on a per-year basis, that's quite significant, nearly 9 a year. In 2009, the company made a couple of really solid acquisitions in the $3 billion range. That included Tandberg as well as Starnet Networks. And I think the company will continue to aggressively pursue acquisitions to fill the holes in their product portfolio. They're also going to continue to aggressively repurchase shares. So although they do have a large cash balance, I think they have been deploying it pretty consistently, and I think that they will continue to stay opportunistic in terms of potential targets.
Okay, Bill, we're running out of time here. Let me just ask you, you still have a buy rating on Cisco shares. It's trading at $26 and change, and 15 times earnings. Is there still value in the stock?
Yeah, we think there is. In fact, Cisco is clearly emerging stronger from the downturn. And at Edward Jones, we're very focused on the long term. And when you look at the potential outlook for Cisco over the next 3 to 5 years, we think it's very compelling, whether it is the routers and switching market or the new opportunities such as unified computing and their video initiatives such as telepresence. Stock's currently trading at about 14 times. We think that's very reasonable relative to the market, relative to where it's traded historically. So we would be buyers at this level.
Yeah, buyers at this level, 35 buys and no sells right now on Cisco shares. But how much upside are we looking at here, Bill?
Well, we typically don't have price objectives here. You know, I think that over the next 3 to 5 years, again, the company has quite a runway. There's a lot of tailwinds. They're an industry leader. And CEO John Chambers talks a mean game about growing 12 to 17% in the long run. If they can achieve that, then there's a lot of upside.
All right, Bill, nice talking to you. Thanks for that. Bill Kreher joining us there from St. Louis, Missouri.